The middle class wanted Finance Minister to give them more money in their hands. The demand of the middle class was to exempt taxes up to 10 lakh rupees of salary. And guess what? Finance Minister Nirmala Sitharaman has over-delivered on the middle class's wish list. And it's not 10 lakh, but 12 lakh rupees. Yes, that's right. No tax for salary up to 12 lakh rupees. And not just that, as much as 1,10,000 rupees in savings for the higher tax bracket. Well, what a fantastic budget session it's been when Finance Minister has gone out and indeed appeased the middle class. But what does this budget mean for you, the tax-paying citizen? Not just on the income tax front, but what does the budget 2025 entail for India's fiscal prudence and glide path for better economic growth in coming years ahead? And more importantly, is there enough in the budget in terms of job creation, employment and formalization of informal roles? Well, let's discuss all that and more over the next hour or so. I'm joined by a battery of experts in various fields. Let me introduce them to you. I have with me Mr. Dhirendra Kumar, founder and CEO, Value Research, joining in. We've also got Dr. Srinath, Sridharan, policy researcher and corporate advisor. And in the studio with me, I've got Mitali, Nikore, founder and chief economist, Nikore Associates. Well, thank you so much, everybody, for being here on this show with me today. Mr. Dhirendra Kumar, let me begin by asking you and really requesting you to break down this change in the tax structure and what it really means for the middle class.
Oh, it does not require any elaborate breakdown. It's very simple. If you earn 12 lakh rupees, the minimum that you save on taxes is 78,750 rupees. And for every higher slab, it is about a lakh of rupees as you go up. So in that sense, it is pretty straightforward. Anyway, the government has been trying to drive taxpayers to the new tax regime, which does not provide any incentive for or any incentive for savings, investments, or any kind of exemption, but it is very straightforward. And there, the rates that is visible on the screen itself is becoming very moderate. So investors or savers will have more money in their hand. And the remarkable thing about this announcement in this budget is that every time there has been such a reduction, it has come with all kind of excuses. It has come in a very reluctant way. This time it has come in a very lavish way. Everybody was expecting 10 lakh. It has come without any, any strings attached and without any ifs and buts, with the encouragement that it is, and it is coming with a very straight face that, the government says that it wants to drive up the consumption.
Right. So consumption is one side of the story.
But I would like to just add one more point,
right,
which I think is very crucial, is that all these years, last 20, 30, 40 years, I have run, nearly over 30 years, I have run value research. Indian investors have been initiated to investments entirely by way of tax saving.
Right.
No longer. They will have no, that has been the, starting point. In the first quarter of the year, somebody will tell you that if you invest, then you will get this tax break. No longer. Investment and tax breaks are completely disconnected now.
Right, absolutely. So I wanted to, in fact, get your view on exactly that. That is this pretty much now the time to kick the old tax regime out of the window, kiss it goodbye, and these exemptions could very well not be part of the new income tax bill which the finance minister has promised to present in the coming week. So can we expect no more deductions, no more old tax regime?
But, my sense is that we just have to wait for another week and when it is, expected. But things are becoming very clear that if you want a no-nonsense return without any ambiguity, without any complication, then the new tax regime is the way to go.
All right. Before I move on, one more question to you, Mr. Dhirendra Kumar, and this one comes pretty much on the social contract which government after government has had with savers and investors. Those folks who have put in, who belong to the higher income bracket, perhaps my generation, in and around my generation, those people who have made investments in these long-term deposits like the PPF, for example, any incentive for them to now stay tuned into those investments, and those have lock-ins of 15 years or so. So number one, you're perhaps, I mean, we'll get to know in a week or so, but perhaps disincentivizing the old tax regime, maybe some sort of cheating with people who have stayed invested in those tools. And then add to that, perhaps we will see these tools of saving money not being as popular and more money going into the markets. And the economic survey has warned that the markets could pretty much be on the verge of becoming asset bubbles.
I would just like to be very specific about the Public Provident Fund. It is India's most popular and sought after fixed income, guaranteed by the sovereign, savings vehicle. And there are two benefits which investors derive by investing in PPF. One is the Section 80C, investment up to 1.5 lakh rupees every year.
Yeah,
is treated as a tax exempt income if you put that money in PPF. That for one is not relevant anymore if you are choosing the new tax regime. You can very well ignore that. Second thing which is only unique to Public Provident Fund is the interest income from Public Provident Fund is the only income
which is tax-free.
Besides agriculture, which is tax-free. There is no other form of income which is tax-free. So, and that has not been touched, that has not been referred. And maybe the 80C becomes irrelevant in the new tax regime, but that particular thing still continues.
Absolutely. Well, I think one more asset class which was offering tax-free returns, but we haven't seen much on that, are the sovereign gold bonds. And I was hoping that the budget would give us some details on that, but I think the budget remained conspicuously silent on the sovereign gold bonds. But before I go to Srinath, and I know Srinath is going to have a contrarian view, he usually does, I want to bring in Mitali Nikore into this conversation. Mitali, help us understand the fiscal glide path. We have revised our fiscal deficit downwards for this year from 4.9% to 4.8%. Yeah. Even better fiscal prudence for FY26 at 4.4%. Yeah. Now, if we see more and more migration to the new tax regime, lesser direct tax collection for the government, presumably more number of nil filers, is the consumption and GST on consumption going to offset for this deficit in direct tax collection?
So first of all, thanks a lot for having me in the studio and on the show. So I think, at the end of the day, the government has played it very intelligently. Because the category on which the tax exemption has been provided is actually the category which pays the lowest amount of tax but has the highest number of taxpayers and tax filers. Because you see, if you look at the overall size of the population paying taxes, it's about 4 to 5 crore people.
That's right.
Nearly 20% of those, or even 25% of those, would be at least 20-25% of those would be in the exemption bracket. So
that's right.
You have in one stroke of a pen given this relief to at least 1.5 crore people.
Right.
On top of that, the amount of revenue loss you're making is minimal because they were already in the lowest tax bracket to begin with.
Right.
And you've revised, your limits in such a way that those above 24 lakhs are now paying 30%. So you're actually offsetting, and this is what we call classic progressive taxation.
All right.
They have gone for classic progressive taxation to reduce the income inequality in the country and to create a scenario where those who can pay and who have the ability to pay can pay a little bit higher, and those who are struggling should be getting the exemption that they deserve.
Right.
And both of these categories, I mean, we don't expect the consumption of those above the 24 lakh range to get impacted too much with a higher tax.
All right.
And here we are unlocking a lot more consumption.
But those above 24 lakhs were in any case paying that tax rate of 30% because they were above 15 lakhs. So that's a valid point. I see where you're coming from. That it's not just the up to 12 lakh rupees salary, but all the way up to anything under, let's say 20 lakh rupees is getting incentivized with a lower tax rate. Okay,
exactly.
Let's bring in Srinath. Sridharan. Srinath, you and I were exchanging some messages earlier, and you didn't really think that it was as much as a big deal it is being made out to be, this tax cut. So your initial views on taxation before we move to anything else.
Yeah, Kartik, I think your program's title is Magic Bullet. I'm glad both those words don't exist. There is no magic.
There's magic and there's a bullet.
And luckily the middle class, the lowest slab also escaped the bullet. I think let's leave those two words away. I think it's, we have to, one, appreciate the government. I mean, for a fiscally completely tied in economy that we are facing, I'm glad that they did not go overboard announcing any poster boy things that would have meant large expenses which we wouldn't have been able to afford. I think what to me is the greatest fun is, I think I'll agree with Mitali. I think it is about tax justice to the lowest slab. But let's not get carried away. Let's move to, I think what is going to happen is, will we see inflationary trend in asset classes like real estate and gold as we go on, because the surplus amount of tax savings could get driven into some of those economies. And here I want to be a little controversial. I think the middle class, the new middle class of India, is what I would call the erstwhile Delhi style by conspicuous consumption. There is no, it's a show of culture, there is FOMO. I think we all have Instagram pressure of living up to their neighbors. I think that, I mean, I'm nobody to comment on how they spend their money. I was a little disappointed that there was expectations around long-term capital gains tax and all that. And for example, bringing fixed deposit taxation slab on par with anybody else didn't happen. I mean, that could have been, I think, a big move for a lot of senior citizens who depend on fixed deposits.
Okay.
I think for me, MSME is a large pivotal role of middle class and lower middle class as well, because you have a lot of single owner entities as well. And I don't think the budget addressed any of those, but for some minor tweaks here and there. Financially prudent budget overall, but I think middle class, I shudder to think if they're hungry, give them cake too, is what we did for one slab. But what about the rest?
All right. What about the rest? Well, at least there is something, if not enough, if not too much. And see, I think as citizens, as taxpayers, we are never satisfied with what we get, and Srinath pretty much, exemplifying that for us today. But before we move on, let's quickly listen into that portion of the budget speech of Finance Minister Nirmala Sitharaman and the kind of thumping it received in the Parliament when she announced, and she really played it to the gallery, didn't she?
Absolutely.
I mean, she said, I'm introducing it, I'm coming to it, and then she just went round, and bang came the last part of the budget, which really resulted in this change in the tax slab. Let's quickly listen in to what the Finance Minister said on the floor of Parliament.
Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Well, that's the kind of appreciation that this magic figure of 12 lakh rupees brought in the Parliament and all over. I think, our newsroom was buzzing, and I'm sure anybody watching the budget speech would have really celebrated today. But let's move on now. And Srinath, I want to just bring you back into this conversation. Let's move on to something that I, as a journalist, and I think a lot of us as working class in the country were expecting, and that was the expectation on job creation. I didn't find too many schemes or, too many announcements on creating fresh jobs. Do you think we've done enough already? Or I'm sure we haven't done enough already, because there are enough and more people who are unable to find jobs, or jobs that don't pay as well as they expect their jobs to pay. But I didn't find too much focus on employment. I didn't find too much focus this time around even on manufacturing, barring perhaps one or two sectors like shipbuilding, perhaps clean energy, windmills, solar components, etc. And of course, toys happen to be one focus. But apart from that, not much on employment this time around.
Yeah, I mean, Kartik, I think I mean, in fact, in the morning show, we were how we don't have economies of scale and size that a Chinese toy maker would have. I think
Yeah.
the reality is that I think it's a political hotbed to speak about anything that will concern employment and manufacturing. I think that would have taken the limelight out of this middle class announcement.
Mitali, budgets are about adjustments, adjusting one part of or one allocation, one sectoral allocation with another.
Yeah.
I think given that consumption was taking a beating, India's growth was taking a beating, do you think the finance minister has been justified in taking the actions that she's taken to put more money in the hands of the people who were grappling with high inflation as well?
No, absolutely. I think there's a global thinking which is emerging right now, which is to say governments overall should be smaller. And there should be more and more money in the hands of people. We've seen even the US president talk about a scenario where the US would have no income taxes.
Yeah.
So, there is a movement towards that, and this is one of the ways in which the government can think about giving more and more liquidity to people to spend where they need to spend and what are the essentials for them. I also want to reflect a little bit on the jobs question, because I think, there was a moment where she talked about employment-led development, and she also spoke about 4 pillars of the economy, really. We talked about MSMEs, agriculture, export promotion, and investment. Now, it was in the investment pillar where I found it very interesting that she was talking about employability, because on jobs, there are 2 sides. One is creating the jobs and industries, ease of doing business, export promotion, all of those schemes which she was announcing in newer sectors should ideally create the jobs. But on the other side, and one of the issues I'm sure many of the entrepreneurs face is hiring, right? You are going to hire, but you don't find a sufficiently skilled person.
That's right.
And there, I think on employability, she spoke a little bit when she was talking about human capital investment, but I feel like that's where the focus should have been a little more, and focusing on the digital economy. I didn't hear enough of a focus on the digital economy today.
Right.
And we were expecting that. The Deep Tech Fund was announced,
Right.
but we're not entirely sure how many people will be able to benefit from that fund, and will that be a broad-based benefit. So I think there we really need to see much more work. I loved what she said on agriculture, and I think that is a major job creator for the future.
Right.
We always think that manufacturing will create jobs, but it's not necessary. We can see jobs in rural areas, we can see jobs in climate resilient agriculture, food processing.
Right.
And there I think the new thinking which she displayed today about crop diversification, about new seed varieties, this is the kind of thinking we need to advance further.
All right. Well, let's bring in Dhirendra Kumar again into this conversation. Mr. Dhirendra Kumar, agriculture, employment in agriculture, I understand the rural economy upliftment, but agriculture again continues to be a sector where it wasn't expected, but as expected, the government did not obviously introduce any taxes. So the question I want to actually bring to you is from this perspective of widening the tax net and the burden of economic growth and the tax that is collected by the government, the personal income tax that the government collects, that burden not being restricted to very few people, but being shared by a larger mass of people. Do you think Budget 2025 delivered on that widening of tax net and sharing of burden?
No, undoubtedly not. In fact, in the previous budget has always been, very reluctantly trying to make, give any kind of relaxation. In fact, it has always been that, you get a concession or you get a relaxation, and it will come with a lot of, as if, the government is embarrassed to do it. In fact, for the first time, it has come with a fairly open and clear, without any catch, that we are getting this clarity that new tax regime, 12 lakh rupees if you earn 70,000. It is very direct and straightforward. Always in the past, and I think this is the right move forward, because broad basing it, and the cost of administration, the cost of bureaucracy, the cost of the way the taxpayer is ill treated by the for trivial violation, the way it lingers. I don't think we really, as a country, estimate the worth of the overhead. In that sense, I think it's a great way to move forward. Not to say that broad basing. If the government has worked towards making GST is scalable,
Yeah.
applicable. Everybody is a taxpayer and is a very liberal taxpayer in this country.
Right, absolutely. And I want to take one more question to you before we move on. This also sort of is in the realm of personal finance. And this is by way of certain changes made in TDS and TCS. In fact, on TCS, the exemption on TCS being collected on international spends has been raised from 7 lakh rupees to 10 lakh rupees. And even the exemption has come in by way of education loans. So from a personal finance point of view, the simplification of tax rates on TDS and enhancing the limit on TCS for international travel. Just explain to us what seems to be the rationale behind this and how does this help the wallet of the taxpayer?
No, it is more than the wallet, it is actually the headache, because the moment you have this TCS and the way you go about recovering it, the cumbersome process and the way you go about retrieving it back, even if it is not, because this was made a law not very long ago, that the moment you remit the money, you have to, that this gets applicable and then it has to be recovered in your tax filing. But not to mention what Sridhar said earlier, I would like to point to three things which I think has been little beneficial. I think a lot more can be done about them, but has been beneficial for the senior citizen. One is this TDS applicable on the interest that has been increased from 50,000 to 1 lakh rupee. Second is, if you had a rental income of 2.5 lakh rupees, that has been increased to 66 lakh rupees. That I think is quite reasonable. Otherwise, for most people in their senior citizens, they are otherwise not a tax. They are not filing return, but just to get your get your refund, you will have to file it. So, and TDS effectively becomes, it enforces you to do that. That is the second one. Third is that, third important thing that has happened is that, the definition of fixed deposit, if held for 3 years, the interest income will be taxed almost like your long-term capital gains, 12.5%, which I think is very beneficial for all the retirees who are long-term fixed income investor.
Right. Okay. Srinath, final word to you. I want to understand from you and help the viewers understand from you that how much of this budget was really about the economy and how much of it was about political management, especially for Delhi's middle class, and the number of times that Bihar was mentioned in the budget speech.
Yeah, I'm not sure about the Delhi part of it here. I think definitely Bihar. I mean, it suddenly looks like the newest political capital of India. But having said that, I think one fair statement I think Dhirendra made about trusting citizens. Every budget we hear that we're going to be more transparent and trusting citizens, but the tax regime still seems to doubt its very citizens. I think that has to change. But more important context, one positive takeaway, we still have to look at the detail, is that we are going to bring gig economy workers in the safety net, some kind of social security safety net. I think that's a very, very good one. But to me, the missed opportunity politically, and I'm hoping that this year ahead, we will have what I call the LAL reforms, land, agri, and labor. I mean, if you're very serious about geopolitical viability, we're going to find Trump becoming stronger, China, a lot of those conditions. I mean, to me, we have not done anything about climate change. We spoke about climate taxonomy last budget. Nothing has come out so far. AI, it's a minuscule spends. We are nowhere near the global AI scenario. So lots to catch up. But again, the positive I want to close with, for the first time, we are going to move ahead with nuclear energy. I mean, to me, that's a very, very big move.
100 gigawatts by 2047, of course, some action there. Well, let's leave it at that, gentlemen. And Mitali, thank you so much for taking time out and being with us here and decoding, deconstructing Budget 2025 and what it means for you, the middle class taxpayer. Time for a short break now, but coming up on the other side, an exclusive conversation with Dr. Arvind Virmani and his take on Budget 2025. Stay tuned to News9 Live.